Hi all, today we will discuss about insurance. Basically, insurance means it's a transfer of risk from one party to another. We insure our cars, we insure our phone, home, we insure ourselves. So it's basically just like purchasing a warranty. And there are basically two types of life insurance involved. Those are term and the other one is permanent. So term is basically like for certain ages there is a certain fixed cost associated with it, and you pay that small amount of money, you get a term. And when there is a cash value involved, that policy is called whole life or universal life. Universal life is a kind of flexible policy, whereas whole life is a kind of guaranteed policy which gives you guaranteed return. So there are two types of term insurances, which is convertible and renewable term. So convertible means the policy that can be converted into permanent insurance in the later times. And you can see that in the initial stage you don't have much amount of money. At that point you can buy a term insurance, and later on you can renew it to a permanent, or you can actually convert it into a permanent policy. And renewable term means usually a policy is being taken for maybe 5 or 10 or 20 years. So if that policy gives an option to renew, it means that after the period of 10 years you can actually renew that policy again to another 10 years. But during that time the payment depends upon that particular year. Look into more detail about level term. There are different types of terms: annual renewable terms, 5-year terms, 10-year terms, 20-year terms, 30-year terms, which means that the premium remains same for all those period of time. Cost related changes with your age. That's something you have to be very careful while understanding these renewable term policies or regular term policies. Cost depend upon the date which you have opened. And now moving on to the advantages and disadvantages. Term insurances, it's low cost, covers liability for specific amount and it off time. And moving into disadvantages, it's insured only for a specific time and policy can have a chances of lapsing. Then premium is lost if you don't die within the term, and it cannot be renewed within a certain age. Now moving into a question: when you buy a home, which insurance you should buy? As you know, home is a decreasing liability. Go for 30-year decreasing term, meaning coverage comes less moving towards the time. So certain strategies depend upon your choices, suggestion from different advisors, but depending upon your situation, just go for it. And then comes permanent insurance. And in permanent insurance, it is just like, if a term insurance is like renting an apartment, permanent insurance it's like owning a home, where cash value is associated with this account, and that potentially generate little bit of interest to help pay for higher cost of insurance as you get older, which basically means that you are pulling little bit of extra money on top of the basic term, and that's how a permanent insurance concept arises. And that cash value will grow with a compounding interest, and that compounding interest will slowly pay off the insurance premiums in the later ages. And there are basically two types of permanent insurance. One is whole life and universal life. When guarantee is offered with permanent, that's called whole life insurance. That gives you a certain guarantee that it will provide certain amount of money. That's called whole life insurance. So wealthy class people actually use these strategies to save some amount of tax. While life insurance is a policy, as you keep whole life, part of your premium purchases insurance, which is sold back to the life insurance company, creating a cash value, meaning there is a fixed premium for that particular amount of value, and amount never keeps changing. You pay excess amount of on top of the term insurance, and it just creates that excess amount of money grows in a compounding interest, and that's how interest has been generated. And you can go through the advantages and disadvantages, where the disadvantage that I have to highlight in terms of whole life is that the payment or the premium is always fixed, and you cannot actually change the premiums in between. The growth remains comparatively constant, and the death benefit is also fixed. Moving on to universal life, it's a kind of permanent policy, but it lasts for entire life. It has a flexibility of premium where you can change payments with the time, and excess cash value in the same way you can actually change. Excess cash value you can actually take out. So the main difference between UL and whole life is something like whole life gives a guarantee, where universal life is flexible. And then comes advantages and disadvantages. As I mentioned, the main advantage of universal life is flexible premium. Moving on to the differences between all of those three. You have to understand the difference between term, whole life, and universal life. Why you should go for term? What is the scenario in which a term insurance is more preferred? There are people uses the different strategies to understand the insurance, but depending upon the need, just choose what insurance you want. But understand the difference. I hope you guys got a clear picture about what I was saying. Follow for more contents, and thank you guys.